Welcome back to Smart Money on CNBC-TV18. We're talking about asset classes like InvITs as well as alternate asset classes like private credit, etc. We have with us Nitin Jain, who is the chairman of the NEO Group. Nitin, before the break, you explained to us very beautifully the difference between InvITs and, of course, AIFs and that route as well, how you can invest there. But since we're on the topic of alternative investments, there's one more strategy that's gaining popularity amongst HNIs, amongst family offices. Private credit, right? It's becoming a preferred diversification play in the debt category, and now that the MLDs are no longer tax efficient and debt mutual funds are also now unable to meet that yield requirement of investors. So just if you can explain for the benefit of our viewers, what exactly is private credit, what is the kind of minimum ticket size I need to have, and what are the benefits?
Super. So first of all, I think a lot of people ask me this question, what is private about private credit? So I think it's, again, I'll take you to the same corollary that I used earlier, equity and private equity. Private equity, it's a bilateral trade between the lender and the borrower. So private credit is that. It's a bilateral transaction between the person who's lending and person who's borrowing, unlike bond market. So if you see bonds, I mean, people are selling bonds, anybody can buy, the price is the same. It is a completely negotiated contract between two parties, generally without a bank. So private credit generally is not associated with banks. So a lot of asset managers lend money. People in very specific needs borrow money for various purposes. A lot of these areas are not very well banked. And hence, it's a very special underwriting capability. And hence, it also enjoys that kind of a excess return. So the ranges, when you hear private credit as a term, it can be performing credit, it can be special credit, and many terms are popular. But the range of returns is anywhere between 14 to 20%, depending on the kind of a horizon you have. Most of the people today participate through the private AIF route in private credit. And AIF, by definition, you have to have minimum of 1 crore to invest.
But why is it that I mean, don't you think that if you reduce the minimum ticket size, perhaps you can get more participation into private credit?
Well, that's true. But and actually globally, by the way, I must say, I think it's very insightful that you say this. A lot of private credit funds are starting to get listed, which is a very unique, very, very new phenomenon. But to be fair, I think it is a new asset class. It is a very illiquid asset class, okay? And the risks have to be well understood. If you remember what happened in the mutual fund category on the credit side, actually that was a very simple structure, but it carried ALM. And hence, obviously, it had its own set of issues. I think what the regulators want, and rightly so, is that the people who understand what they're getting into, have the sophistication levels to appreciate the risk return, are the ones today that who are getting in. Over a period of time, who knows? Maybe even in India, we will have some listed platforms who are doing private credit.
Okay. So you spoke about that special situations credit, right? It's a strategy that yields 20% in a lending model. What is the kind of investments that a private credit fund would do, and why should investors agree to pay such interest costs to a private credit fund?
Actually, I mean, that's very interesting because, when you hear 20%, suddenly your mind has a lot of red flags, right? I mean, it must be some very high risk. And why would a company borrow at 20%? Yeah. So as the name suggests, it is a special situation where probably, let's say the company is going for last mile financing. The infrastructure is ready, just the last mile funding. And for some reason, the company is short of that capital. So specific lenders can come in and fill that particular need. You are going for an acquisition of a company. Okay? A company, let's say you are trying to buy a company in NCLT. Typically, you will see banks not being able to finance it because banks do not have a product which has flexible cash flows to be received. It's typically an EMI model. Whereas when you're doing something like this, what you have to be clear is it is linked to the cash flow. So as the cash flows in the asset comes, the same way your cash flows are coming as a lender. So for that, you have to have a very specific underwriting skill, capability, infrastructure, diligence capability, etc., etc. Unique skill, but very large market. Very, very large market. And the amount of capital that is available for this today in India is very low. We are trying to do our bit, and I'm hoping, and actually we are already witnessing that at least 4 or 5 new players have come into this space. And I do think it will become one of the larger asset classes
for HNIs.
For the HNIs, absolutely.
Okay, and that community is also growing, right? Maybe not in terms of numbers, but in terms of absolute value for sure, the HNI community.
That's true. And I think even in numbers, Sonia.
Really?
today we have 9 lakh millionaires in this country. Okay?
Dollar millionaires.
Dollar millionaires. People with 10 crore plus net worth. I'm just talking about the numbers published by one of the very reputed magazines recently. Our internal assessment in 2035, we will have 1 crore millionaires. Okay? I mean, this is outrageous, right?
Yeah.
1 crore millionaires. So not only are we creating wealth, but we are also creating wealthy people.
Okay.
And it's even better than China, for example. China today would have 65 lakh of millionaires because wealth is getting democratized.
Yeah.
I see a lot of young professionals at the age of 25, 30 starting companies, making money. All their employees are making money. It's a beautiful world out there. 10 years, India is going to be the 10 best years that India has ever had.
It's very interesting you say that because, I mean, the stats are out, right? We are 144 crore people,
Right.
out of which not even 3.5, 4 crore people invest in mutual funds.
That's true.
I mean, that just goes to show that there's so much scope for penetration.
100%. 100%. People are still lining up to put money in fixed deposits, right?
Yeah.
I think $3.5 trillion is in CASA and fixed deposits in India. And typically, I have seen these are returns less than G6. So I think there's a long way to go from our general mindset that, the only place to invest is fixed deposit or real estate or gold. I think the movement started. It has started. It is taking off. By the way, mutual funds has not taken off, but you see what players like Zerodha, Grow and Upstocks have done, right?
Yeah, of course.
The direct equity, it's crazy. I remember 6-7 years back, monthly new players coming in, new participants coming in were 2 lakh maybe a month. In the last year, if I'm not mistaken, the numbers can vary between 20 and 30 lakhs a month.
Wow. Finance has become like pop culture now, I mean, social media has made it that way, which is, I think, great. Yeah. I think it's great. We've run out of time. Would have loved to chat some more, but thank you so much for joining us here on CNBC-TV18. And I understand that this private credit market is picking up in a big way, and it sort of, calls for a larger discussion on another day. We'll definitely take that forward.
Thank you so much, Sonia. Really appreciate it.
All right. With that, have a great weekend. It's curtains down on Smart Money. We'll be back in just a bit with lots more news and action. Stay tuned.